What opportunities we have here going into our afternoon. This is what we were inside of last week as we were going into our Wednesday time frame. Remember, we had broken daily longs, and then going 24 hours later, we had squeezed into the very first measured move short after the trend breaks. The resistance levels up here were the 68.80. The line in the sand was the 69.19.25. The profit targets were the 66.41. And as we came out of our Thursday timeframes and into Friday, we had confirmed those downside profit targets by breaking through these longs from lows. And so as we went into our Thursday afternoon, we had the very first measured move shorts after trend breaks. And that's what gave us an entry into this sell-off going into the weekend. And it's been an incredibly technical couple of days here because from that Friday resistance levels, from that Thursday and Friday resistance level, we completed our profit targets here at the reopen on Sunday night, Monday. And those targets completed. Now, as we were moving forward into our morning timeframes, we had completed all of our targets. And so what we were anticipating was a counter trend squeeze into our new resistance levels this morning. As we were going into the pre-market time frame, we were watching for, as we were going into the bell, for the first, the chased short, as long as we defended above these 66.29s, that those chase shorts would fuel a rally into our half gap fill, which is the L line, the 50% short, the full halfway back short from highs, and it also just happened to be a psychological 100 handle move from these lows here, which were 66.41.25, and we went to the 67.41. Incredible. Now, as we move forward into the rest of the day, we've completed all of our counter trend longs. And now we're going to be running back up into resistance. Where are the profit targets to these short setups? They're all the way down at 65.10. And we're in the 67.50s, 67.40s, excuse me. So what we're going to be exploring here first are our leading indicators and what they tell us about where the indices travel to here as we're moving forward into the week. The first thing to note is, yes, DXY did dip into last week Thursday's lows to highs, but is it still going straight up in extensions? Yes, it's still going straight up in extensions. So everything above these 98, 634s, the indices are going the equivalent of straight down. These are bull flags. So everything above the 98, 634 is bullish for the US dollar. And because of a negative correlation that we currently have here with the indices, we have a downward pressure on the indices because, again, negative 0.66, negative 0.60, negative 0.54, negative 0.55. The dollar goes up, the indices go down. The dollar goes up, the euro goes down. The pound goes down. The dollar goes up, Bitcoin goes down. We got a negative 0.43. There are neutral to positive correlations with the precious metals, despite the fact that there's a positive a positive trend here for the dollar. So we're coming right back up into our new resistance levels here. Let's move on. Bank is going straight down in extensions. Now, again, we had room to squeeze up into extension. This stream continues at eMoneyAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.